Welcome to RANsquawk morning briefing for Tuesday, the 23rd of February 2010. In terms of at the European Open this morning, did see quite an aggressive dollar sell-off, some talk of Asian central banks selling of the US dollar this morning, which did put the dollar index down around 0.5%. That was reflected across the major pairs and crosses in the FX markets. Some of that dollar weakness being attributed, according to some analysts, ahead of the Bernanke semi-annual testimony, which is to come tomorrow and also on Thursday, where he's likely to continue to stress that rates, in terms of the federal funds rate in the US, will be kept low for an extended period, looking to take away some of the emphasis on that Fed discount rate hike we had at the back end of last week and distinguish the two differences between the two rates as he continues to look at a more dovish policy stance. In terms of other things as well, it has contributed to a bit of a lift in Aussie was comments from the Deputy Governor of the Reserve Bank of Australia, who was pretty hawkish in terms of his viewpoint on commodities and that of further strength potentially going forward for the Aussie dollar. And that in turn has led the basic materials sector to outperform in terms of the European sectors. So the FTSE CAC and DAX have traded in positive territory, up around 0.5% or so, helping erase some of the individual losses that were seen in the likes of Commerzbank and also Merck in the DAX after weaker than expected Q4 earnings pre-market. In terms of some of the other notable movers, it has been based around the UK products. In particular, sterling in the currencies in cable has fallen around 100 pips. That was coming after Mervyn King and the MPC in their testimony of the recently released quarterly inflation report. They've said in the main comments, Miles, that there was a finely balanced decision in terms of halting or pausing in the QE in the last decision, and King said there could be further QE, however it is a month-by-month decision. As mentioned, cable trading down at around 100 pips on the back of that comment, and that did provide a bid into gilt futures. In terms of other economic releases, we saw a slightly weaker headline in terms of latest IFO report in Germany, and that's also contributed a bit of a pullback for the euro across the board. Looking ahead then in terms of things to come, much of the focus will now be for the US traders when they look ahead to the latest consumer confidence reading for the month of February. Most consensus at the moment suggesting a minor decrease from the previous, reflecting some of the adverse jobs conditions in the February period for the US. That'll be at 3 o'clock London, so that'll be 9 in Chicago, and then later on as well we'll be looking for the first of the normal Treasury auctions. That'll be for 44 billion in the 2-year notes, so that'll be at 6 o'clock London, that'll be midday in Chicago.